stocks. But let's talk about our special segment, Insight Edge, where we got some great insight from a conversation that we had with Apollo Hospitals this morning. And they did say that they're actually open to buying good assets, and HCG was one of the names that they mentioned as well. Ekta joins in with what she gained from that. Ekta.
Well, Manglam, I'll just get to the part about HCG in just a bit. I just want to talk about the overall capex for the company and in terms of growth when it comes to their beds. So they just acquired a partially operational hospital in Kolkata for around 100 odd crores. The company says that this new hospital will be fully operational in the next 12 months. They're looking at further possible acquisitions as well. Now, overall, in terms of the capex, besides expanding in East India, they are also looking to add around 2,000 more beds across the country. So they have a capex of around 3,000 odd crores in the next 3 years. So that'll be important to track in terms of an expansion. Now, acquisitions. They had said that they have had, they have looked at HCG before PEs came in. Now, they will probably look at it again if in case the CVC does want to exit HCG. That has been on the cards. Apollo, however, has expanded its oncology vertical as a standalone business. So it's not something that they would look at HCG only for expansion in that vertical. They are quite self-sufficient or have been looking at that. In fact, they do have the Proton Center in Chennai when it comes to oncology, and that's actually one of the foremost centers in Asia for that particular type of therapy when it comes to cancer. Separately, Apollo 24/7, which is their digital arm, they will reach operational break-even by Q4. Cash requirement will reduce. They're looking to dilute up to 10% stake in Apollo 24/7. They would probably look at raising $100 to $200 million, on track to exceed GMV of 3,000 crores. In FY24.
Okay, in fact, I think we did, of course, speak to Sunita Reddy, the managing director at Apollo Hospitals, asked her a whole host of questions to discuss their expansion plans of diluting stake in Apollo 24/7. She said that she's looking to dilute up to 10% stake, not more than that, in Apollo 24/7, and looking to do that very soon. Listen in to all that she had to say.
We looked at Healthcare Global before the PE came, and of course it is a wonderful asset, very good clinical work. Having said that, taking over assets from PEs is not easy because we have a hurdle rate in terms of IRR, which is around 19 to 20%. But we will continue to look at these acquisitions. We have made bolt-on acquisitions, which is why, we're very confident of adding 2,000 beds. And in addition, our oncology vertical is currently at a run rate of 2,000 crores. So in terms of margins, in terms of return on investment, it is above 20%. If you look at the good things that are happening in 24/7, in the fourth quarter, they will reach operational break-even, which means that the requirement for cash has come down significantly. Having said that, I have always maintained that at the right valuation, we will be able to do a dilution. We do have interest in the stock, but we believe that, at the right valuation, we could do this. So currently, they are very self-sustaining in terms of cash required to grow the business. It's between 100 million to 200 million, but 200 million is an appropriate figure. We are on track to exceed that number.
Okay, well, let's do one thing. Let's take a quick commercial.